Good evening to all of you, and welcome to this weekly market presentation by SC Securities. So, let me begin with the Colombo Stock Exchange performance as usual. Then I will proceed into key economic highlights from the local front, and from the global front, I am expecting to deliver some information in terms of global commodities and international financial markets. So let's begin with the market performance. So this week was not a very good one for Colombo Stock Exchange, where both the indexes declined throughout the week. So if we look at Monday's trading session, during the session, SPI lost 109 points to close at 8,983.74, whereas S&P SL 20 index also declined by 51 points to close at 2,720.73. So this was basically due to the overarching concerns regarding the recent tax hike, where by the announcement of government, the most of the corporates are being taxed at 30%, and even the personal income taxes, the threshold has been lowered. So the concerns are there, insisting government to increase the threshold, especially in the case of personal taxes. So, with all these concerns, investors approached a wait and see stance ahead of the next month budget speech. So, the negative sentiment was lasted throughout the week. Especially during Monday's trading session, turnover was just rate at a value of 1.9 million, so 1.9 billion. And if you look at the foreign purchases and sales, foreign purchases stopped at a value of 136 million, whereas only 49 million worth of foreign sales were reported. Then during Tuesday's trading session, the same momentum continued. SPI declined by 117 points to close at 8,866.05, and S&P SL 20 index also declined by 46 points to close at 2,674.33. And during the day, the turnover was reduced compared to that of the previous days, just to report a value of 1.87 billion. And foreign purchases reported a value of 54 million, whereas foreign sales stood at 24 million. But during Wednesday's trading session, there was a slight bounce back. So SPI gained 22 points to close at 8,888.37, and S&P SL 20 index also gained 3 points to close at 2,677.37. So this the increase was not at a sustainable level. So it went down back on Thursday, and it continued on Friday's session as well. During Wednesday's trading session, despite the increase in both the indexes, turnover lowered to report a value of 1.5 billion, and foreign purchases reported a value of 66 million, whereas 13 million worth of foreign sales were reported. So during Thursday's trading session, then again SPI and S&P SL index lowered down, especially in terms of the price decline in the index heavyweights, the retail favorites, LIOC and Expo. With the recent revision to fuel prices, both the petrol and diesel prices, investors are anticipating the fuel prices to come down in tandem with the global oil prices. So with that, both these stocks, the retail favorites, came down, and that had a very negative impact on both of these indexes. So during Thursday's trading session, SPI went down by 151 points to close at 8,737.38, and S&P SL 20 index also lowered by 64 points to close at 2,613.06. Turnover level was further came down to just 1.49 billion. But on this day, foreign sales picked up to report a value of 414 million over just 31 million worth of foreign purchases, and that actually resulted to generate a net foreign outflow for the week. After a couple of weeks, where we could have seen foreigners remain positive. And the Friday's trading session with more or less the same, it also declined. The SPI declined by 52 points to close at 8,685.52 for the week, and S&P SL20 index also declined by 15 points to close at 2,597.87. So turnover level was further lowered to report a value of 7-week low 1.3 billion, and however foreign purchases picked up to report a value of 213, but that was below the previous day's foreign sales volume. So with that, throughout the week, the overall net foreign position remained negative, and the outflow was reported, which was worth of 2.6 million. So for the week, SPI lowered by 4.49% and S&P SL20 index lowered by 6.28%. And then we have a look at the treasury yields. Treasury yield remain at the same level with the 3-month yield standing at 33.05% and 6-month yield is at 32.53% and 12-month yield is at 29.60%, despite the enormous numbers of bids received. In terms of these treasuries, the central bank has accepted only a minimal amount. So the yields remain at the same level with no change. If you look at the spot rate, Sri Lanka rupee depreciated compared to the US dollar, but it resulted slight appreciation in terms of Great Britain pound, Europe, and Japanese yen. So looking at the economic highlights for this week, as of the central bank, the National Consumer Price Index based year-on-year inflation for the month of September has rose up to 73.7% over 70.2% from the previous week, that means in August. And this was attributable to both the food and non-food categories despite the reassurances from the central bank and the government. So the food inflation has rose up to 85.8% over 84.6% from the month of August, and non-food inflation also rose up to 62.8% from 57.1% in August. So if we look at the CCPI based inflation, CCPI based inflation for the month of September was also standing at a percentage of 69.8%, and that was 64.3% in the month of August. And a month-on-month inflation resulted in a noteworthy increase of 2.34%, despite all the assurances, claims regarding that we are at a disinflationary situation, the prices are continuing to pick up. And the purchasing managers index results also being published by the central bank. So as of that, the manufacturing sector has resulted a setback in activities with an overall value of 42.6, and that was a 7 index basis point decline on month-on-month basis. So this decline was basically due to the decline in new orders and the production, especially in the food and beverage, retail, textile and wearing apparel sectors. And that was the production decline, and the order decline was basically attributable by the recession fears in the export destinations, so they lowered their demand for most of the commodities. But the services PMI, however, gained up by 0.5 index points to stand at a value of 51.2 for the month of September. And these improvements in the services PMI is attributable to the improvements in the overall financial sector services, accommodation, food and beverage, and education subsector services. And these are the basic highlights from the economic front. And let me move into the global front. So looking at the commodity markets, most of the commodities declined for the week, but by the end of the week, it's said that the commodities are somewhat steady, especially the oil prices declined throughout the week, but by the weekend, the prices were steadied after the concerns of demand from the Chinese end, because the China is planning to ease their COVID restrictions so that the visitors can go China for their visits, and the demand from the China will expected to increase in near term. And gold prices also declined for the week, yet the debate in the Federal Reserve in terms of the pace of rate hike has negatively affected on the dollar. So with the ease of dollar, the gold prices have been calmed up despite the weekly decline. And aluminium prices also declined for the week as the stocks in the London Metal Exchange warehouses has been increased, and there was sort of a fear that having the Russian origin metal in the warehouses that can lead to distort prices because the Western countries have already imposed sanctions on Russia for attacking and invading Ukraine. And if we come to the international financial markets, global markets behaved on a mixed note for the week. So most of the Western stock markets and the US and the European stock markets have positively reacted and ended up with gains, but some of the Asian markets ended up with losses for the week. That was basically due to some positive news from the Federal Reserve that the pace of a rate hike will slow down, and the Federal Reserve is intending to lower their aggressive rate hike, but that's still on a demand. Sorry, that's still on a debate. So, with the investors expecting Federal Reserve to calm down their interest rates, the Wall Street positively reacted, and the European shares also rose after the resignation announced by the Liz Truss, the Prime Minister of United Kingdom. We also discussed this fact in last week as well. Her controversial tax cut plan to revive the economy was criticized by majority of the parties and led to a lot of economic boost in terms of the price of the value of pounds and in the bond market that leads to some of major disastrous situations. So with that, she announced her resignation this week, and the European shares picked up. So Japanese Nikkei market ended below the benchmark average of 27,000 with the concerns of a recession, but the price increases in the chip maker companies have somewhat kept the gains, somewhat kept the losses incurred. And Indian shares also rose higher with the support from their strong corporate earnings. Yeah, these are the facts that I got to share from my end. So from here onwards, Harin will continue the presentation. Over to you, Harin.
Thank you, Sachini. So looking at XAU USD gold during this week, we can clearly see that the price broke the previous daily support 1650, 1660, making it a resistance level now. We currently have a low at around 1614.925, which is 28th September low. And also we were able to see that how that low was initially tested during this week. And there is also a retest at the level of the daily resistance 1650, 1660, as it was a daily previously it was a daily support. Now that the price is trading below that key level, it is taken as a initially a daily resistance at the moment. So breaking above this 1650, we'll be able to see the price coming towards the level of 1685, somewhat around 85 to 87 range, and then to the psychological area of daily resistance 1700. So worst case scenario, rejection from this 1650 range would initially bring back the price towards to the 28th September low, 1614.925. So breaking that low, also we have the daily support level of 1600, 1610. As the price is already trading below 50 and 20 EMAs, we currently have a bearish momentum. So therefore we need to look into these areas as gold price is still in a declining momentum since due to major fundamentals that's impacting the price of gold. So looking at the OSHA index, so this week from the daily chart, we can clearly see that the 50 and 20 EMA is about to have a crossing, and also the index is trading below both the moving averages. So this is a very negative setup as for this moment. So in order to have a bullish momentum, the index needs to cross above 9,000 and trade above the 50 and 20 EMA. Then only we'll be able to see a bullish momentum. Uh, then only we'll be able to see a bullish momentum to be yes. So multiple rejection from this daily resistance 9,000 being a psychological area, and also 26th August low, which is 8,677.78, is considered as a key area as well. So if the index manages to break that key area and we have the next daily support at 8,450, 8,500. The RSI is in the mid range, which is 33.73 at the moment. So if a crossing occurs from the 50 and 20 EMA, further the index could decline and the bearish momentum could further continue towards to the level of daily support 8,450, 8,500. So like I said, in order to see a bullish momentum, we need to see the index crossing above the level of 9,000 and trading about both the EMAs, which is 50 and 20 EMAs. So we have the topic of the week as CIC Holdings PLC. Here we have taken the monthly chart. So in the monthly chart, we had the previously a monthly resistance at 75 and 80 in between. Price managed to broke and make a retest in the month of October. So and also breaking the weekly resistance, previous weekly resistance, now it has become initially weekly support. So the next resistance is the monthly resistance at 110, 115. Also we have psychological area of the price of 100. So we'll just shift to the a different time frame to see how the price is actually trying to make the another retest towards the level of 94, 97 and to the psychological area of 100. In the weekly chart, we have a crossing from 50 and 20 EMA, which indicates a bullish momentum. So but however, there's a strong gap between the price and the moving averages, so this could actually give us and clear idea that there could be further retracements towards the weekly support of 94, 97. So after making certain retracements or below the weekly support or towards the weekly support, only we'll be able to see the next wave, a bullish wave could occur. So the monthly resistance of 110, 115 can be tested only if the 17th, only if the price breaks the high of 108. So we have a high of 108, which is this week high. So once the price manages to break that key area, the monthly resistance 110, 115 could be tested, and then only we'll be able to see how the price would move from that key area of the resistance towards the next key area. So at the moment, what we can clearly see is either the price could consolidate in between the level of 94 to 115, or yes, so that could be the initial setup. So weekly chart, we have the RSI at 80. Monthly chart, we have the RSI. It is also quite overbought at the moment. So this is the clear setup from the for the CIC. So I hope you will enjoy this video. Please do like and subscribe. Thank you very much for watching this video.